Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. On Thursday, we took a total of one trade, one winner, for a total absolute return of $2,644 or 1.15% in our 1% risk model portfolio, where we risk no more than 1% per trade. The trade was 74.10 long put for 115% return. This brings the total return on the week up to just under $13,000 with only one losing trade. On the session, all major U.S. equity indices traded and closed lower. SPX 1.2%, NASDAQ 1.9%, MEGS 4.6%, led lower by Google 7%, Tesla nearly 15% post-earnings. That was the catalyst we were looking for the next directional move, for a move away from the fair value zone of 7,500, 7,510. We most certainly got that, opening with a gap to the downside and breaking below the recent lower bound of 74.30, moving in to 73.75 and the multi-month upsloping trend line before finding support. In terms of our trades, well, it was just the one trade, but there were plenty of opportunities. We shorted the first pop here, the oversold bounce at 74.50, looking for a move back down. You could have also played the oversold bounce. Markets do not move in a straight line, hence why we were saying in our Discord, do not short the open. We would look for that bounce before getting in. So this could have been counter trend, but an oversold bounce play, which could have manifested into a squeeze rally. However, that was not our base case. Around 7,400, I wouldn't have been a buyer here, right? And we talked about the 25-point range, the amount of time left in the session. But when you got a bit more oversold down here at 73.75, good oversold bounce, back up into 74.30, and then this was another good short, looking for that move back down. And our base case quite early was that we were not going to see a squeeze rally, and we were going to close below that lower bound of 74.30. Now, 74.30 is a significant level, has been for a long time. If you're trading the S&P 500, if you have been trading the S&P 500, you know its significance. But let's just zoom out here to the 1 hour chart for context. 74.30, it was the upper bound for a period of time. We had a really high volatility chop range. For about a week, we broke out and it became support. We had several squeeze rallies off that handle and we broke below it. So that is a bit of a range break, a bearish indication. However, bulls did find support at this upsloping trend line connecting the June lows. So 1, 2, 3, we tested it twice in yesterday's session, just before the big MOC rally. Now, the big thing yesterday was the move higher in volatility, moving up into the 19 pivot. We did close below it, which is a positive, and we did see a peak near 20.5, which has been a zone where we have seen recent peaks and a volatility reset. So seeing some vol activity, vol sellers at that zone is to be expected, but vol is still elevated. If we do get rebid here, potential target is back up to 20.5, and then a break of 20.5 opens the door to 22, 22.5, which is also a recent peak zone back in earlier June. So whenever you're buying the dip, when vol is elevated, when you're in negative gamma, we're always looking for that peak and contraction in volatility to fuel that upside. And there is fuel for a squeeze rally, no doubt. And we got a bit of a taste of that yesterday on that oversold bounce in the morning. So I would say just be aware of the presence of feedback loops at this juncture, both positive and negative, and we want to continue to pay close attention to the VIX. The VIX has been a key driver for several weeks now. Just to expand on that with a couple examples from yesterday's session. First, if you were buying the dip yesterday, it was clearly a counter trend trade. And when you're in an environment which is one-sided, you're below the transitional levels in negative gamma, vol is elevated, and upside is dependent on a vol down environment. You want to be utilizing SPX support levels in tandem with VIX resistance levels where we've seen recent peaks. So the oversold bounce here at the open correlated with VIX 19.5, a recent peak. This peak here in the overnight yesterday, kind of an odd candle there, but we did see that vol crush. Now, we didn't see follow through on this, right? No squeeze rally. Vol got bid off the 18.5 handle, and we moved up into 20.5, which correlated with 73.75 and that upsloping trend line. So that's another point of confluence between SPX and VIX. And we had a nice little squeeze rally here as vol contracted. Now, there's no guarantee it works, but under these conditions, utilizing the two in tandem can increase your probability of successfully picking that turning point. For today in the pre-market, all major U.S. equity indices are trading modestly higher. S&P 500, 0.3%, NASDAQ, 0.2%, Russell, Dow up about 0.4%, VIX trading just below the 19 handle. Levels, dynamics, largely unchanged. First, bulls need to reclaim that 74.20, 74.30 zone. Zero gamma today, 74.20. SPY put wall and ABS at 74.27. The bulls need to break and hold this zone. It opens the door to 74.50, which remains a big gamma level. The previous session's high and also entry into a gap overhead. Gap fill, basically 7,500. And then there's going to be some resistance within that gap. Recall that 74.70, 74.75 pivot that we've been trading over the past week. On the downside, 7,400, more major support here, 73.75. This marks the previous low, that upsloping trend line. And then a break of the previous low is a trend continuation signal with support at 73.50, 73.30, 73.25. Followed by the big SPX put wall at 7,300. Transitioning over to our dashboard, total gamma exposure for the SPX is negative 390 million notional, trading below our main transitional level of 75.10. Below, most strikes are negative, that is destabilizing for the market price. Above, most strikes are positive, that is supportive for the market price. Zero gamma level, 74.20, and then we have 74.30, so that's that 10-point zone that bulls need to reclaim. Above, the profile becomes much more neutral, some strikes positive, some strikes negative, and that's basically just a re-entry into that trading range that we've been chopping around over the past week. Below, all strikes are negative, that is destabilizing for the market price. 7,400 key level, bulls did close above, we're set to open above, so that is a positive. Below that, we have 73.75, 73.50, 73.25, 30 zone, and then the big support level on the downside, 7,500, that is the put wall, the strike with the highest net negative gamma, so potential downside target and bounce point, probably not today, but perhaps next week if the downtrend continues. In terms of the implied move today, 1%, that is an implied high of 74.82 and an implied low of 73.34.